Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of SEC filings and tell you what it all means for you. Today we've got Aeries Technology Incorporated, and we are going to dive into some interesting changes they made to an agreement. So what we're looking at today is a Form 8K from Aeries Technology Incorporated. Now this filing isn't a huge financial breakdown like some 10QS or 10Ks, but it does tell us about a key change to a contract. Think of it like a company announcing they've tweaked an existing deal with another party, and this tweak is important enough to let investors know about. First off, let's get the basic details out of the way. The report is dated the 31st of December 2025, and Aeries Technology Incorporated is the company we are talking about. They are incorporated in the Cayman Islands, and their main operations seem to be handled from Singapore. Interestingly, they are listed as an emerging growth company in the United States, which is a status given to newer public companies that allows them some flexibility in reporting. They've also elected to use the extended transition period for complying with new or revised financial accounting standards. The heart of this filing is in Item 1.01, which talks about a new material definitive agreement. This sounds technical, but basically it means they've signed an important contract. In this case, it's an amendment to a previous agreement. So they had a letter agreement with a company called Sandia Investment Management LP, originally dated the 16th of September 2025, and now they've made amendment number 1 to that agreement on the 31st of December 2025. This letter agreement is actually related to an even older deal, a confirmation of OTC equity prepaid forward transaction from way back in November 2023. This sounds complicated, but what it means is Aeries had some kind of deal with Sandia to essentially prepay for something or exchange something with Sandia now for future delivery. The letter agreement was actually designed to help Aeries meet its obligations under that original forward transaction deal. Specifically, the letter agreement allowed Sandia to sell Aeries Class A ordinary shares. These were shares that Sandia already held from that original forward deal. The purpose of these sales was to help Aeries cover what it owed to Sandia under that forward transaction. The original deal had a condition that these shares would be sold at a price no lower than $1.05 per S-Hair, and this was set to continue through the 31st of December 2025. This period was called the designated period. Now here is the key change. Amendment number 1 extends this designated period. Instead of ending on the 31st of December 2025, it now goes until the 9th of January 2026. So they've just added a little bit more time for this specific part of the agreement to play out. All other terms and conditions of the original letter agreement remain the same. It's worth noting that Aeries Technology Incorporated has two main types of securities registered with the Nasdaq Capital Market. They have Class A ordinary shares, and they also have redeemable warrants. These warrants give the holder the right to buy a Class A ordinary share at a specific price, which in this case is $11.5. This particular amendment is about the sales of their Class A ordinary shares. Finally, the filing lists the exhibits. The most important exhibit here is Exhibit 10.1, which is the actual text of Amendment number 1 to the letter agreement. This is the document that formally outlines the changes we just discussed. There is also a cover page interactive data file, which is standard for these filings. So what does this all mean? On the surface, this is a minor extension of a contractual deadline for selling shares. It seems Aeries and Sandia needed a few more days to complete part of their arrangement. There are no dramatic financial numbers to dissect here because this is not a financial results report. It's more of a corporate action announcement. The fact that they are extending a period for selling shares to settle a previous transaction suggests that perhaps the original timeline was a bit tight or circumstances required this small adjustment. It doesn't necessarily indicate a problem, but it does highlight ongoing financial arrangements between Aeries and Sandia. For investors, it means this particular arrangement will continue into early January of next year. It reinforces the existing relationship and the mechanics of how Aeries is managing its obligations stemming from that 2023 forward transaction. Looking at this from a Warren Buffett perspective, we are not seeing headline financial performance here. Instead, we are seeing the nuts and bolts of deal management. The key takeaway is that a previously established agreement which involves the structured sale of company shares to settle an obligation has been slightly prolonged. This suggests stability in the relationship between Aeries and Sandia and a continued effort to manage outstanding financial commitments. We would want to know more about the original forward transaction to fully assess the implications, but for now this amendment points to a controlled continuation of an existing business process rather than a new strategic shift or a sign of distress. The risk here is minimal given the short extension, but the opportunity is the smooth continuation of operations without disruption. The conclusion is this is a procedural update to a financial agreement. Alright, that is our breakdown of Aeries Technology Incorporated's latest filing. What is your take on these contractual adjustments and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.